Hey guys, welcome back to another video with the financial controller, Bill Hanna here. Today I want to talk about the things that are scary about being a corporate controller. So to be fair, on this channel we talk about the role and responsibility of a corporate controller, and if you haven't seen my video on a month of the life of a corporate controller, go ahead after watching this video, go ahead and click on that link to watch my video on the role and responsibilities. So we talk about that, and we talk about how interesting it is to be a controller, the lifestyle, the salary, all of these things, right? But I think to be fair, we have to talk about the things that are scary also about being a controller, right? The things that sometimes can keep me up at night or even give me nightmares, right? So today is going to be dedicated to all of these things. And make sure you watch this video all the way till the end, because not only I'm going to share the things that are scary about being a controller, but also I'm going to share with you the tips and the things that I do to cope with all of these things. So without further ado, let's dive right in. Okay, we'll begin with a quick half-a-minute summary of all of the things that I deal with, my responsibilities as a corporate controller. So the biggest thing is going to be financial reporting, which is closing the financial period and producing financial statements. Also, I deal with payroll, taxation, dealing with outside auditors, billing, accounts payable, and cash management. Okay, so we'll begin with the first thing on my list that not only me find scary, but other controllers that I speak with as well, which is sharing financial statements with investors. Now, as we said, one of the responsibilities of the controller is to close out the financial period and produce financial statements. And the natural journey of these financial statements is that after you finish them off and you create a financial package, you will share it with management of the company, and then it gets shared with investors, whether it's the public investors in the form of a public filing like a 10K, or private investors if the company is backed by private equity or venture capitalists. And if I go back in time about 12 or 13 years ago when I was an accounting manager for the first time, and that was the first time for me sharing a financial package with outside investors, and I still remember that nervous, gut-wrenching feeling that I had about sending the financials, and what I had to do is open it multiple times before I hit the send button. I open it once, twice, and 3 times, check the number, double check, triple check the numbers, because I was super nervous about it. And the surprising thing is that now after 12 or 13 years, this feeling never goes away. You continue to feel nervous every time you're sending a financial package to outside investors, and you just learn ways to cope with it. So my ways to cope with this today is to create steps for me to review the financials at month end, and ways for me to double check the numbers against the budget to make sure that it's most accurate, and then create a month over month flux analysis to see any variations in the financials that may indicate an accounting error. Now, the second thing on my list is making payments to the IRS and state agencies. Now, as a controller, you find yourself in charge of taxes, either by yourself or maybe you're working with another person on the team who's a tax specialist. And if not, you'll be working with an outside consulting firm to come up with the amounts of money you have to send to the IRS and to the state agencies. And what I find myself doing is when I'm sending the payment to the IRS, usually it's a large payment you're making to the IRS, right? And when I'm hitting that send button on the wire or submit on the website of the IRS, it's always scary because I know that this money can never come back. So if you send the money and there's a mistake, it's very difficult to get that money back. And that reminds me of an expression that my father used to say when we were kids. He used to say that whatever you put in the lion's mouth, you can never take back. Right? And this is very similar here. I feel like whatever you send the IRS or a state agency, it will be near impossible to get the money back if you made a mistake. That's why it feels a little bit scary. What you should do is, double check the number, make sure that somebody else in your team who knows about the matter, knows about the subject, whether it's somebody who's a tax specialist, maybe a CFO, to kind of help you review the number so that you have a double check and a sounding board for the number, for the amount of money you're sending. That's how I typically cope with this kind of worry. All right, so the third item on my list is finding accounting errors after I've closed the financial period. And so typically it takes me about 2 to 3 weeks to close the financial period, and a financial period could be a month, a quarter, or a year, right? So it takes me about 2 weeks to close the books. And then I spend about a week in analysis and making sure that I've captured everything, right? And so any adjustments that I find between the second and third week is something that I adjust for and then finalize after 3 weeks, finalize the financial statements. right? But what worries me is the mistakes or the errors that I find after that third week. And it happens sometimes. And so the example that I have is that once there was a sales executive with the company who worked for about 2 years for the company. And in the entire 2-year period, we haven't seen any trips or travel expenses from the sales executive, right? And after 2 years, he left the company, right? And then all of a sudden, he's submitting receipts for all of his travels and hotels and expenses that is about $100,000 in amount, right? So you can imagine it's a large accrual that we missed. And finding that number was just a large number to swallow. And so we had to go back and adjust the financial statements. And so these are the things that worry me about keeping track of all these accruals and all of the things that are just not on my radar. And so, but what you should do is, and what I did is to learn from each of these experiences, right? So what I learned from this experience here is that we should send an email at every month end to the entire sales team, because this is the team that mostly does all the travel, reminding them of submitting all of their expenses and receipts so that we have everything timely. So the important thing here is that if you find a mistake, it's almost like airlines when they have an airline crash. Every time they do, they realize what went wrong and learn from it and improve on for the future flights. So this is the same thing here. You find an error, you move on, you correct it, you then come up with a procedure to mitigate for future errors that are similar to this one. And if you're wanting to learn more about how to become an effective corporate controller, you should check out the Controller Academy. I'm going to leave a link down below. Okay, number 4 on my list is going to be sending large payments to vendors. And this is one of the areas of responsibility for you as a controller, is going to be overseeing accounts payable and payments to vendors, right? And so there are 2 places that you're worried about. The first one is budget. So is the spend that you're sending, the money you're spending, is that approved from a budget perspective? That's the first one you worry about. And the second one is going to be whether the banking information that you're sending the money to is correct. Because if the banking information is incorrect, you could be sending the money to somewhere else, someone else, and you'll never know until later on when the vendor says, hey, where is my money? Right? And so how I mitigate this is that from a budget approval perspective, I highly recommend you implement a process of a purchase order. Right? So with a purchase order, someone is going to submit a purchase requisition or a purchase request, and then that's going to go and get approved. You can do that through a variety of platforms. There is TeamPay, Approve.com, Coupa. There's a few of those platforms where someone will send a request to purchase, whether it's they're purchasing a service or a physical good, and that's going to get routed and approved by the appropriate budget owner within the company, right? So you develop that so that you can get around the idea of questioning whether this spend is being approved from a budget perspective, because if you implement a purchase order process, that means that every spend gets approved before you even go out and engage with the vendor, right? So it's before engaging with the vendor. So if you have a PO on hand and you have to pay a vendor as a controller, there is no problem. You match the PO with the vendor invoice, boom, you're done, right? So that's the first thing, is looking into implementing a purchase order process. Now, the second thing with the banking information is that when you're looking at a wire in a bank, you're sending a wire, someone in your team prepared the wire for you to approve. Let's say the wire is $100,000 to a vendor. You're not going to always have the time as a controller to go in and check the routing number, the bank account number, all this information for the recipient, right? If you have the time for all of that, great, go and review it, but that's very difficult because you have a lot of other responsibilities, right? So what you should do instead, and this is what I do, is implement a process for the vendor to input their banking information themselves, right? Put the onus on the vendor. Then if they enter their banking information incorrectly, it's on them. Right. So there are a couple of different platforms you can use. There is Tupulti for payments. There is also Bill.com. I believe you can have a link sent out to the vendor and they fill out their banking information. I think Coupa does the same thing. So there's a variety of platforms to overcome the correctness of the banking information so you're not stressed out about it. All right, number 5 is going to be payroll. Okay, payroll is a big one. So payroll is something that you're going to be in charge of as a controller. And it's sensitive because this is people's livelihood. This is how people make their mortgage payment, pay for their credit card bills, pay for their utilities, keep the lights on, all these things, right? So you can't mess with that. That has to be timely and correct. And these are the 2 things, right? Timeliness and correctness. Okay, so the way to deal with timeliness, right? You're always worried about, are you going to be making all the approvals for the payroll in time to make sure the money is reaching employees on the same day that you expect, whether it's the 15th of the month, the 31st of the month. In the US, it's twice a month, and in other countries in Europe and APAC, it's once a month. Regardless, timeliness is important, and so what I do is keeping a checklist in Excel to make sure that I'm hitting all of my milestones. So I have like a calendar in Excel, and I go in and I review it. You can also add calendar reminders for yourself so that you're reminded with every time you have a deadline, either to approve or disperse payroll. So that's for the timely aspect. The correctness aspect is really important as well, because you should have a process for onboarding your employees, right? Getting the tax information correctly, because tax information from them is going to drive how much is being deducted from their paycheck. Right? Correctness in terms of any commission or bonuses. Highly recommend having a process of somebody preparing the payroll and somebody approving the payroll. So for example, in my team, I have someone prepare the payroll file and then for me to review it. So payroll is really, really important and very sensitive because people want their money on time. All right, the sixth item that is scary on my list is when management questions my numbers. So as I said, the financial controller will send out the financial package to management every period end for review before it goes out to investors. And often management has their own expectation of certain items on, say, the income statement, for example. So they have a certain expectation of what gross margin is going to be. They have a certain expectation what is operating profit going to be around in a ballpark, right? And when they see that number different from their expectation, then they have questions usually for me. And so the one case I remember working at a food manufacturer in the past, and the gross margin number was questioned by management, right? So they expected gross margin to be around 30%, and it came in around 27%, right? So a disappointment from 30 to 27%. So the reason for it was a write-off for expired goods, right? And obviously, no one wants to hear that they have an expired good and they have to deal with, and that's a write-off. But that end up hitting the margins, the gross margins, in terms of cost of goods sold. And so my advice usually is to keep track of these adjustments that are large, that are affecting especially gross margins or operating margins or profits, right? And these could be write-offs, could be changes in accounting standards. Anything like that is to keep track of it in a memo so that when somebody comes back to me and asks me, why is this number different than what I expect, then I'm ready with an answer and back it up with some support. So that's the sixth item on my list. All right, thanks very much for watching till the end. And if you know someone else in the field who will benefit from watching this video, make sure to share it with them, and I'll see you in the next video.